Here we go. Okay. There we go. I was wondering what was going on there. Okay. So we're going to go ahead and get out of EEM. Close that one. We've been sitting there too long. Let's see. Okay. See if I can do this. Oh, wait a minute. There we go. So let's see if we can get some credit for this. Okay. So we're out of EEM for about 100% profit. Yeah. About. So we bought it for 77. Nah. 77. 45, 55. So so we're out of that. Okay. Because we've been sitting in that trade too long. And it was not doing anything. GDX. No, we could still stay in GDX. Looks like X is cooperating a little bit. TLT, that's a free trade. Okay, SPX. Let's see what we got here. Okay, it's up slightly. Basically, we're still in that 6,000 mark range. Cost of fear. It's down a little bit. Okay. Cost of money. It's down from yesterday. It popped up yesterday, but it's down a little bit. Cost of speculation. Bitcoin. Wow, so Bitcoin, yeah, it's definitely. I guess that 100,000 mark was the ultimate thing. So it's pulling back a little bit off of that. Inventory. Where are our deltas? Okay, delta wise, we're still good with everything. Let's just make sure. Intel's the only one that we're short deltas on that, but did we roll that? No, I was trying to roll it yesterday. Yeah. So Intel's the only one that may need to be addressed. That was the one we were trying to roll yesterday. Yeah. What if we tried to roll it today? Intel. Roll that up. Let's see. How much credit would we get if we wanted to roll it? So we're at 11 deltas. If we rolled it, bring a few deltas back. Oh, what do we got here? What would it look like? Nah, I wouldn't roll it that much. Because then we'd be 5 deltas the other way. We rolled it this much. You're only getting 12 cents of credit. I'd have to get a lot more credit to roll those deltas. I'm not getting any buying power either. So I'm gonna sit on my hands in Intel for just a little bit. If it happens to fall a little bit more, then I may roll it. Okay, what else do we got? Inventory. What happened yesterday that didn't get filled? Okay, Intel, and there was another trade. Was it Boeing? Okay, GDX. That was the one that I was rolling, but the deltas are better today because I was trying to roll GDX. Okay, we got out of EM with about 100%, a little over 100%. Let's see. EEM, we're out. GDX, we were going to roll. Let's see where we're at on the deltas in that. Yeah, okay. So I'm going to sit on my hands. We're still delta neutral in that. Volatility is still up on it as well. Okay, so we'll see what goes there. A lot of these we still have. Yeah, we're out 34 days. So let's see that 34. Yeah, so I'm still sitting on my hands on that. Okay, let's take a look at any new trades. I was looking at a double butterfly. That was the one I put on the other account that I was trying to get in on that double butterfly, but that never got filled. That was on the Thinkorswim account. I was going to do it here, but I'd rather do it over there. And that double butterfly, that's why I didn't do the video on that yesterday, because that was one that I was doing on the other chart. Man, I can't see anything today. KRE, I really wanted that trade. That came in a little bit on volatility. I've never done petroleum Brazil. Only 547 contracts. 547,000. UNG, that's the one that I had. But volatility, thank God I didn't do it because volatility just went and spiked up like crazy on it. Nikola, penny stock. That one right there, I expect to go to zero. Let's take a look at the ETFs first. Let's go to filter. And bring some more ETFs in. Okay. See if there's anything. I mean, there's some high volume, but not seeing anything except for FXI that had volatility go up. Do I have any FXI? I had it. Yeah, I traded that a little bit, but I don't have any positions on it. So let's take a look at FXI. Chinese stock. It could easily fill this gap. It's definitely the place where demand was at, way, way back here. Where demand was at, way, way back here. Could easily fill this gap and then just range. It would be a nice range. And FXI, except look at volatilities getting sucked out of this. What is our volatility like? 22. Nope. Doesn't have enough. You're not getting paid for it. If we were to go, you could tell just by the IV rank. Even though the IV index is up, IV rank is really low. Except you did have a pop of 20% volatility. But if we looked at this as a trade, we would have to look at this as going out 52 days, January 17th. Yeah, see, look at these. These strikes 85. I don't like the granularity. What was that GDX trade? Okay, that's 52 days. Okay, until 52. ARC. Okay, got 24 more days on ARC. We'll see if that cooperates. 56.76. If I were to go ahead and move this strike to the 54, yeah, it would cost us 7 cents. So it's not worth it. I'm trying to make a free trade out of this trade. And what's our risk? Okay, so we got 18 cents of credit. Yeah, because I'm trying to see 18 cents of that credit. You know what? If we got 18 cents, I don't mind spending a little bit because this thing is December. I don't mind. We'll see if we could do it for 6 cents debit and turn that into a free trade. In other words, the trade would be, I'm spending, it would be 11 cents credit instead of the 18 cents credit, 11 cents credit. But I don't mind turning this into a free trade. Oh, wait a minute. $51.52. There we go. So, okay, now 16 cent debit, that would be basically $2 is what we would be. Okay. I'm going to go ahead and make it $3 in terms of the credit. Try to turn this into a free trade. Not that ARK Invest, there's a lot of risk on there because where's ARK Invest at? Yeah, I mean, it could drop, but let's see. It could drop. It's just that how many days do I have? 24 days on that? Yeah, I'm gonna see if it'll get filled. Just mitigating the risk. See if I could turn that into a free trade, kind of like TLT. The thing is we won't be getting a lot of credit because TLT is I mean, same, let's see, same thing. Let me see with TLT. Is that the same thing? Basically the same thing. Yeah, we're taking some of our credit off the table, but we're mitigating risk, turning that into a free trade, a riskless trade, basically, where there's no risk. And that's what I'm doing, is trying to turn this into a no risk trade. And that's, I mean, when the butterflies do that, and we're still out, we're out 24 days. That's when you want to start making decisions, start moving things around a bit. That's when it's like, okay, let me go ahead and and do something. Not just sit out there forever. What else do we have? XLF was another one. No, that's January. That's January. VIX that should be December 20th. Yeah. No, VIX is January. No, that's December 18th. So, but VIX it's already a dead trade. It's been like that after there was a post Donald Trump trade. Tilray, that's January. I don't care about that, or MSOS. Those were basically free trades, or I should say, gambling. It's like a penny. It's a little lotto ticket until January. The thing is, okay, we don't have. Let's see, if GDX, how much does GDX pay us a day? We get paid Theta. We get paid $2 a day in GDX. Let's see what that chart looks like again. Okay, I'm gonna sit on this just a little bit, but so the other one that I want to deal with is ARK Invest. because we got 24 days, 21 days, on the Tasty trade, they go 21 days, but I want to see, so 15 debit, if this will get filled, then that'll turn that into a free trade, taking all the risk off the table. And I don't mind doing that, which means it turns it into a lotto ticket trade, basically, in terms of risk. Okay, let's see what else we got. So USO and UNG were the ones. I don't normally trade those because they could easily pop either way. I mean, they could get away from you. EWZ, that was the one I tried to get into, but volatility went down on it. I wasn't able to find some volume on those contracts. USO, let's see what USO looks like. Yeah, I mean, it's everywhere. Volatility is coming in. It's everywhere. ATR is through the roof. It can move about $4 easily on you. If we were to do USO into January, what would that look like 52 days from now? Let's see, 18 deltas, 17 deltas, 188 at a 2800. Nope, that's just way too much for the risk. You're not getting paid enough, even if you wanted to condor it. 65.60, 84. Yeah, see, we'll go 85, 84, 85, 90. There's no contracts. Yeah, you're not getting the width of the strikes, but there's no volume on those. It's not traded. EWW, that was another one. Yeah, look at the granularity. You're not getting a lot of contracts. Plus, these strikes right here, the prices tell you there's nothing really happening. EEM, that's the one we just got out of. Look how low that volatility is. But then again, I don't mind that. That would be another, if I did another one, that would be another buy the volatility. And a double calendar, an EEM. See, SLV, we already got metals. These are all red. FXI was the only one that I was looking at that I could sell volatility in. But going into January, yeah. Look at the granular. Just already telling you there's no volume on these. 24.85. Those prices. There's nothing there. Going out to January, SMH. Nope. I'm looking at all these. So in terms of the 5-day change of volatility, the only thing that I see out here that is something I could deal with is XLU. If I were to try to sell volatility, XLU, and that's it. Except XLU is 18 volatility index, so you're not going to get paid on that. You want that in the 30s. We went out, okay, 16 deltas, 14's closest, 75 of $1,000. Nope, you're not getting paid to take this trade. And you could just tell because the IB index is so low. Anyways, and that's going out, to the January strike. In terms of just stuff to sell, now let's go to, we went to ETFs, now let's go to stocks. Is there anything to sell in stocks? Okay, that Save Boil, no, I never do that. UNG was the one I put on the other day, but it was just, if you look at this, I mean, The ATR isn't terrible, but it's going up a little bit. It could easily move on you about $3. Almost. No, I'd say actually $1.50. This thing can move on you $1.50 either way. I love the implied, but the implied has been kind of high. It only spikes down. Again, natural gas. It only spikes down, but it likes to stay a little high. If you look at the implied vol, the red and the green line. So that's just another thing that's just a little something to, hey, Brother Will, Hotep. It's a little scary. If we go to 16 deltas, 17 deltas, 80 cents on 360. It's not the best of it. I mean, that's about, I mean, that's, I want to stay out of its expected move, and I want to keep those deltas around 16 on this, especially this, because it can move. So that would mean the 12 strike and the 22 strike. That would be down here at the 12. And then the 22 is way up here. And that's before January. I don't mind that. It's just that natural gas is like one of those things that could easily. I mean, 80 cents, you're not getting the third. That's the major problem I have with this. Is you're not getting a third. Let's see if now look at all those folks that believe it'll hit the 20 strike. If you did this, 99, 368, you're still not getting, you're not getting the a third, So for 80 cents and still yet the debit is the same buying power, you're still, you get more room, but and I mean it's not appetizing. So let's see what the buying power, 67 with a buying power. Yeah, so you're not getting that third. So it's not really like worth it. You do have an 88% chance of making 50%. Yeah, that makes sense. 81% chance of making a penny or more, and you get paid $2 a day. We move this up to the 12, 218 a day on theta. So, for 18 cents in theta, it's not like, the juiciest of trades. And then if we went, let's see. Okay, you're getting 211. So for 11 cents more, it's not like, it's not like, oh yeah, this is the greatest of all trades. 64 to 73. So from the 64 to 73 credit, that's a nice, that's a big spread. If I did this at the mid price, you had more than likely would be filled. But between the mid price and the ultimate price that you want to sell it for, there's just a lot of room there. You know what? $61 to $68. Yeah, this thing is moving already a little bit. If I did this 66 times 3, it's not like the greatest of trades. But at least, you know what? I'm gonna do something crazy. I'm gonna see 68 cents on the 299. You'll never get filled because it's way off the mid price, but I'm gonna do it anyways, just in case. Let's see if I conjured it real quick though. Can't. There's no volume. There's no contracts. This thing is not. I'm gonna sit on my hands in this one. It looks like maybe a butterfly. Looking at the price of this thing, omnidirectional butterfly type trade. So if I think that this thing can move, if I think it could fall, Not like I'd be looking at natural gas falling anytime soon because it's winter. I would put the butterfly around, say around 16. What is that delta there at the 16 strike? No, it had to be way higher than the 16. Let me get closer to the screen so I can see. It would be around 17. Okay. So if I do that butterfly around 17, what's our deltas there? No, I'd have to make it higher because that's an 84% chance that thing will get touched. See if we put her at that 20, where the 20 is at. That delta is 50% chance that thing will get touched at the 20 strike between now and January. So if we did that at the 25 delta, we'll go one strike higher. Down there. I could do a ratio, but oh, there's no contracts. Never mind. See if we moved it down a little bit. And let's double this and see what kind of credit. 18-cent credit. 117 profit to 80 minus 83 cents. So if we were to do this, we are getting credit. See what it looks like, what our mountain looks like. I mean, it's definitely off the, it's definitely on its way down the mountain. Okay, now it's down to 2 cents of credit. Okay. Yeah, we were asking for 18 cents credit, and then this thing is moving. It's definitely moving around on us. Yeah, 2 cent credit. No, that's the mid price. So no, I'm gonna sit on this. I mean, who knows? It could get filled. The thing is you do have again, there's really no volume on this, so I'm just putting it out there. But just in case, there's only one contract out there, 27.46. Look at that. 20 cents spread, 30-cent spread on the bid ask. So there's nothing happening. It's just the bid ask spread is just so wide. If you see it, 45.39 debit, bid ask spread is through the roof. I mean, if I did this, I would do something crazy to see if I got filled. When we first were going to put it on, it was 18-cent credit. I would go in between these two right here. That gives you 77, max loss of 77, 123. You get paid 14 cents a day, 80. Yeah, okay. We'll just do that. It'll never get filled, but we'll just do it just in case. Butterfly on UNG. Saying if UNG went all the way up there to the 20 strike, the 20 strike is our short strikes. That's where all those contracts are at, is way up here in the 20. By January 17th, there's a gangload of contracts out there because it's way up here where those previous highs were. This thing can move easily $1.50. Let's say $1.30. It easily move $1.30 a day. Even though it's, like I say, I double the ATR, especially on like commodities like natural gas. I'll double the ATR on that because those things can move. See what else we got. Coin. Look at coin. Volatility came in massively on that. United Airlines, no. Let's see what we got. XLU, that was the other one. Retail, XRT. I don't really trade that Although it's barely no, we're not getting a lot in terms of our in terms of getting paid to do it. You're not getting a lot of credit. Bitcoin's ETF. Interesting. I don't know the APA. These are some stocks I don't know about. Don't trade those. Rivian. Look at Rivian, man. Rivian is just penny stock. If you look at Rivian, it's just got Tesla. This is the Tesla effect. There's a couple of pops up and down, but look at the implied volatility. It's been going down. So, so Rivian doesn't look like it'll pay us just to get in. And look at the strikes. 15 deltas. 15 deltas. Look at all those contracts. 2,000 contracts. Somebody think this is going to go down to $9. A lot of contracts, a lot of volume. Let's go to 18 deltas. 57 cents of 232. You're not getting paid enough for it at all. The 916 strike, 3 deltas. Even if we went out to the getting 48 cents, you're not getting paid enough for this. There's a lot of contracts. It is up there in volatility, but and you got you got a penny wide. That's not bad. You got penny wide there. You got 3 cents over there. It's not like terrible on the bid ask. It's just that 48 cents on $2 is not a lot of credit. See the mountain. I'd want it to have at least another 60 cents in that. Or go to another 30 cents, excuse me. And that, because it's like 40 to, so it's really a lot tighter than I thought in terms of markets for this stock. But when you look at it, you're barely getting paid anything for it. Barely anything. Look at that skew way up there, man. Look at that. But let's see if there's contracts in between, because you will be moving this thing around. 9, 10, 11. There's not a lot of room to move. You got 2 strikes to move. You do have, a little bit more room on the upside. You can move down if this thing started going down on you. You do have some room to move. There are enough contracts to move it. If you see the volume, there is. Maybe not at the 14 on that, but you do have some room to move contract wise. Problem is just not getting paid for it. There's not a lot of credit. Barely any credit for it. So if we went to 50 cents, we went to 50 cents. Chances are you get paid, and this thing can move. If you see this, look at those spikes. So what were my strikes on that? 1917.5, 1917.5, 9. So the 9 strike. So it could get down here, or they're thinking it could get way up here at the 17.5, which is kind of close to where those highs are at, saying it could get there by January. And it took it how many weeks? It took it from July to get to here in July. So if I were to say the same distance from here to here to here to here, you would definitely do it before January. After January, it would, to get way up there, but it could easily fall to that $9 strike, which is just down here. Because equal distance that it went up there, it could go down here, and it only did that last week. It could do that this week to get to that $9, to go down there. And selling puts alone, you're not getting enough credit. That's why I like strangles, because you're getting the credit. It's a little more risk, but you're getting the credit. Let's see what else. But I'll keep that on the docket. Beyond Meat. Look at that volatility. Is there earnings in this? Except the IVR is only 25. But there must be earnings or something. What is going on with Beyond Meat? No, nothing. I wonder why Beyond Meat. Let's see. Take a look at the chart. I mean, Beyond Meat's the IV rank is kind of low though. If you look at the IV, it's been trending down and getting lower. So chances are you're not going to get paid enough for this. Yeah, look at the granularity of the strikes. Nothing really there. If we were to do this as a strangle, no granularity on the deltas. 57 cents and 214. For this one, I wouldn't do that. So it's a $4, $7 width, so it could easily get to $4, which is right damn near where the market's at, and $7, which is up here. And it could easily do that. Get more volatile. This thing could move 60 cents a day easily. Remember, double the ATR. No Beyond Meats. Anything else? I don't know what this Akiba, I've never heard of OPK. Okay, we're just going down in IV ranks. So I'm not really seeing anything IV rank wise. That Petróleo Brazil, man, that has never gone down. I've never traded this. And let's take a look at it. Yeah, it's not as volatile as I thought. I mean, it's definitely volatile. IV rank is still going up. Kind of in that higher range that where it was at for a while. So the IV rank could turn around. Not to say it will, but it could. Are you getting paid enough if you were to do this? Will you be getting paid? Not enough granularity on the strikes. Bid ask is not great, but it's a little tighter than the other ones. Let's go to 17 deltas. Not enough granularity on the delta though. 17 to 34, so it's kind of telling you. Oops. Let's go to 17 deltas. And that's the 13 out of the expected move. Let's go to, there's not really enough room on these deltas. You're not going to be able to move this. Because you're only getting, how much are you getting? 31 cents at a 230. Definitely not. This is definitely not a trade. I like enough granularity between these strikes. If the more strikes you have, the more ability you have to move it around. And because every trade you get into, you're going to adjust. It's not an if, it's a guarantee. And if there's no room to adjust it, then why get into the trade? Outside of that, so everything is pretty much there. The double butterfly I was looking at, XSP, and I gotta hand it to Mark because he hold on for one sec. Mark over there at Options Mentor, I gotta hand it to him. Yeah. Back, I think I told you back when he was with Sheridan Mentoring, I had a chance to talk with Dan. Great conversation, funny conversation because Dan is hilarious. Had a really good, again, hold on for one sec. Yeah, it was great talking with him. with Dan, but they do these the kind of income trades that they do because I've been aware of Dan and been watching a lot of what he was doing since 2003, and back when he was at the CBOE, and finally good had a chance to, and he's funny. I mean, it was funny, just really good information. He used to trade on the floor, and I like that double butterfly concept of basically it's just an income driven trade. Let me see if I can set that trade up here to show you what it looked like, because I had put it on yesterday on my Thinkorswim account, because that's the one I wanted to test it out and try it. Let me see if it's still valid today, and I'll see if I put it on this account. But yeah, it was really, really. Let's see if I could find it. Man, it's been a while since I traded on Thinkorswim. Let me see if I could, because I can't even remember how to. Let's see what we got here. This is what I did. Okay, now I remember orders. Okay, order history. Yeah. The only thing is you would have to. You have to put this on in two different trades. So it would be. Let's see if I could do this. Okay, order history. Yeah, you would have to do this in two different trades. On Tastyworks, you can't do that. Thinkorswim, you can do that. But you know something. Let me just create duplicate order. That's the only drawback on. See, first trigger sequence. I'm doing this on. Yeah, okay. And then we'll create a duplicate order. So I don't mind doing this on Thinkorswim, but it's basically a double butterfly. Man, okay. Mid price 140. Okay, I just wonder what our because market's going up on us, so it cost us about a little bit more. But let's just see if we can get in there. But basically, you have a butterfly on the bottom and a butterfly on the top. 136.41. Give me 1 second. Yeah, so it's moved against us on the call side. Let's see what we got on the put side, because that's 41 on the put, 38 on the put. Okay, so I mean, yeah, but basically you have a butterfly on the top side, butterfly on the bottom side, and you're basically trying to. I'm gonna still try this trade just to see if it'll get filled. But what it is that basically what it is it's a an income trade where you have, and I can show you a little bit. That's the only problem on Tastyworks is it doesn't have like multiple. Like you'll have to put each trade in, but it's not like a first. You can't do it all on one. I mean, you could only have 4 legs on any option, but to be able to analyze it and see that's the only drawback, is not being able to analyze all the legs. Like you can with Thinkorswim. And analyze what all the legs would look like. If you could do that on Tastyworks, you could do these multi-leg things. These multi-spread things, and just kind of test it to see exactly what it would look like for your risk profile. And that's very important, to be able to see that risk profile in alternative ways. So you could do like, you could say, okay, I want a calendar and a butterfly on this trade. I'll put them on separately, of course, because you can't put it. You can only have 4 legs, but I'll put them on separately. But I want to just see what the risk looks like right now. If I put these 2 trades on, what would the risk be like? And that's one of the major drawbacks that I have with Tastyworks. But this would be what is that? I have this out at. See how many days I had this out. Trying to see it real quick. XSP. Trying to see what the days were out. What days am I selling? 20. Okay, so 20 days. Yeah, I'm out 20 days. I mean, I'm out to December 20th, so it is on the monthly strike. So, anyways, what it is the upper strike is your call, which is 596, 602, and 607. 596, 602. So 596. Oops. Okay, so the 596, the 602, and the 607. And that's your first butterfly. And that one's going for 141. I pulled it down. So the 141, so you have that butterfly going in there on the upper side. We could look at that. I mean, that's a major drawback. So that's this butterfly on the upside, and then you have a put butterfly on the downside. Which, if we were to put this in, again, not being able to have multiple 4-leg analysis, and then take the order and stack the orders so that way you could, like one triggers all or stuff like that. That's just the Thinkorswim definitely excels over Tastyworks in that, because you can really do some really cool stuff. But you have that butterfly, and then you have the put butterfly, where at least being able to analyze it, for income driven trades. Then the put butterfly was a 597, 592, and 587. So 592 is our center. And then 597, 87 are our wings. Then you had the lower butterfly that looks like this. So you have both butterflies. The beauty of this trade is each day you're getting some theta. You're getting paid theta, enough theta each day. It was around $2 or something like that. And because of the nature of the basically it's like it's like having a condor. Because of the nature of this, the beautiful thing about this is that, like on a one-sided, like if it were all leg, I mean all if you had the double butterflies that were all calls or all puts, that middle area, because basically you got 2 different mountains, and each day that goes by, that mountain, it gets deeper and deeper, and you have, you could lose about, at expiration you'll lose, because it's like having 2 mountains and you're like in the valley. But the good thing about this is you keep making money every day in that valley, as opposed, because you have puts and calls. As if you had all puts or all calls, you would be getting hurt in the valley. So each day you're getting paid more and more until the very end. Then all of a sudden, you're going to start seeing the water fill the valley, and then you drown. But the good thing about it is, if this thing does move one way or the other, you get profit until it moves way out to the wings. And on Thinkorswim, I mean, I can show you on Thinkorswim. I mean, it's just a wonderful looking trade. You know what? Let me see if I could do Thinkorswim. And see if I could do that real quick, because I could show you better than I can tell you. And I like that as an income driven trade. It's only $1.40 of risk. I mean, it's purely income driven. It's not speculation. But I really, really dig it. Let me see if I can find it on Thinkorswim, because I think I have a trade on there already working. And let me go to Thinkorswim, open that up, and then again, and that one you could do a first triggers all. So you can trigger more trades on that. Yeah. Yeah, it's just a double butterfly. That's all it is. I mean, I've done double butterflies, I've done calendar flies, I've done a lot of stuff like that. The beauty of it is that it gives you room to run either way, number one. And number two, you get paid every day. And it only starts hurting you toward the end of the trade. Whereas if it were a regular double butterfly, you'll start getting hurt every day you're in the trade because it's not moving toward your short strikes. This is a trade where you want the trade to go to your short strikes. And since this is December 20th, so it definitely has, a lot quicker, you're more than likely, the closer that you have, the more scary and the more risk you have, the more expensive the price is on butterflies. But the thing about butterflies is you want that thing to get to your short strike. You don't want to hang out there too long. You want it to get, I mean, you want it to get to your short strike toward the end of the trade, but you don't want to be in that trade. But the shorter you have it, the higher the price. You do want it to get there. You want to be in that trade. You have to stay in long. Butterflies are trades you have to stay in longer because it takes a long time to get to where you're getting. But you want to make sure that it doesn't get to your short strike then, but you want it to be longer dated because it costs a lot less. So you're paying for the, you're paying for it not in terms of price, but you're paying for it in terms of, of lotto, of trying to get it there. So let me see if I can get Thinkorswim running, because that Thinkorswim, I have it. I'm trying to open Thinkorswim right now on this platform, but it's just one of those things where I'm like, yeah, I like this trade. I got it. Yeah, it's just a regular double butterfly. I mean, I've done many a time, done a lot of double butterflies before. It's just the nature of the trade in and of itself. I really like that. And like you could do all like the all put flat fly, which is again, these are basically, they're speculative in terms of you are looking for a direction, but the thing is they're speculative in terms of looking of a direction, but they're really kind of just income driven trades because they're so wide and so flat that all you care about is getting 8 or 10% and then you're out. I mean, those are things you don't want to stay too long, but you want it to have a longer date. Again, it's like for me, all butterflies, you want a longer date because it's cheaper. But the thing is, you don't want to stay too long. That's what I was trying to say earlier. I mean, you do want to stay as long as you can, but you don't want it, you're going to have to stay in there. You want to stay in as long as you can to make those short strikes, to make it worth it, to make the cost worth it. But the thing is you're gonna, it's like you get paid to stay in long. How am I saying this? You get paid. Let me just do this. You get, I mean, you pay a little bit to stay in longer. It's just that it's one of those type of trades where you're like, man, I know I have to stay here, but dang it, I'd rather, I know I have to stay to get to my short strike if it gets there, but I would rather not have to pay a lot to do that. That's what I'm trying to say. I don't know what I'm trying. I'm up here tripping. Anyways, this is the trade that I got on Thinkorswim. Let me see if I could I could show you better than I can tell you. Really cute little trade. December 20th. Okay, double butterfly, and it pays you in theta. It pays you about $1.50 a day. I thought it was yesterday it was $2. I can show you better than I can tell you. Yeah. I don't really do the Thinkorswim. I don't trade that account much, but I did put this on because it was just a cool trade. I was like, you know what? I kind of like this. This is the double butterfly I'm talking about. It's a double butterfly. One triggers other, which means, you know, that the one trade is gonna, if one trade gets filled, then the other gets filled. But literally, you know, I mean, there's not like a huge amount of room because we're not going to be in till December. You only want to be in this thing till next Friday. So if we were into this till like next Friday at the very latest, that would be, I mean, we're looking Thanksgiving at the latest. Wait, oops. November, let's say, I mean, if I'm even saying this Friday, you know, this is your expected move where they're saying that this market could go. So even if it got to the expected move, I mean, you would literally only be down like $11. If it went down to this expected move, you'd be up about $3. But look at the short strikes. That's where your short strikes are at. Now this is more than likely going to get to our short strike before we want it to. Now in the SPX, this was done in the SPX. So everything that you see here, multiply it by 10. And that's what, you know, that's what this trade would be, multiplied by 10. So if I were to do this in the SPX, instead of $1.41, it'd be $14. But it's cool because if you do it in the SPX, you know, you in other words, you could do this for like 14, say maybe no, actually it'll be about 1600, 1700 in the SPX or 171 in the XSP. But what's cool about it is, you know, depending on how many contracts, you know, if you want to do it, you know, with 5 contracts in the XSP, then, you know, you're spending like about $800. And so the thing is, or about $700. The thing is, it's cool about this. No, about 800. The cool thing about this is, and then you can peel off contracts. This is like something where you want to get 8 to 10%. This little valley right here is where you really get crushed. But because of the nature of this trade, you can stay in longer. Because, you know, the longer this thing goes, the more and more that, you know, of course, you get scared that, this thing is going to go against me, this, that, and the other. And it makes sense. But the cool thing about this, and I can show you better than I can tell you, the cool thing about this particular type of trade is you can stay in that valley longer than than you want without getting completely annihilated. So if we were to stay, if you look at the middle, that valley, let's put this over here, this right here. So right now in there, you would have made, you know, if the price gets down there, you make like about $10. But as each day goes, notice how that valley gets higher until you get toward the very end of the trade. Okay, you get toward the very end of the trade, you know, then all of a sudden, you know, of course, if you stayed in that valley, you would be down. You'd be down like $80, 80, $90. See on the 20, yeah, you'd be down about $73. But the beautiful thing is, you know, because of the nature of the trade, you know, you could stay in this thing. You know, again, you would have to stay in longer, but it's just, you know, you get paid every day on this. It's really a really nice trade. Yeah, I mean, a really cute trade. I really like this. And so I'm gonna start looking at doing more and more trades like this one when volatility is very low. When it's extremely low. I mean, it's really because the only thing is either you do it with multiple contracts on the XSP, or, and again, you would only be into this trade till like Friday of like, if you were to stay in till say next Friday at the latest, which would be this right here, you know, you'd stay into this trade till then. You would only be up, if you did it on the XSP, you would be up $140 out of 1,700. So you get about 9% next between now and Friday. This Friday, not next Friday, this Friday. So you'd have between you didn't make between now and this Friday, you'd make about 8% in about 3 days. If you wanted to stay till next Friday, it gets a little scary. You would be doing much better, but it would be little dicey. You would definitely be up. Probably you'd be up about 20%. But again, this thing can move. It can move on you. SPX and XSP can move. But I like the concept. I do like the concept on it because it pays you. It pays you every day. You know, I mean, you should be seeing the screen. Hopefully, you're seeing it because I'm seeing it. I'm seeing the screen. But yeah, this double butterfly. Yeah, I mean, it's just a really cool trade. Yeah, yeah, I'm seeing it over here. Hopefully you're seeing it. Let me try to share it again. Yeah, see if you could see it again. I'll try to share it. Yeah, I am seeing it again. Yeah, a cool little double butterfly. 10% in 3 days. Hey, why not? I mean, if you're gonna do this trade on the on the SPX, yeah. Oh, okay. Oh, yeah. Okay, good. You see, if you did this trade on the SPX, it'd be, but you can only do it on Thinkorswim. I mean, you could do it on both. It's just to analyze it on Thinkorswim. And the thing is, both trades have to be filled. And that's the only drawback on Tastyworks is it doesn't have like a first triggers next where you could stack orders. Man, that is like, I mean, for trades like this, that is like, you have to be able to do that. For trades like this, to stack orders, I mean, and the good thing about this is if the trade goes in your favor or goes one way or the other, you could still turn those into free butterflies by moving the strikes like I did with Tastyworks. You can move those wings in to make so if it's moving like toward the other short strike, toward one mountain or the other mountain, you could turn that other mountain into a free trade. Just by moving the strikes around. So now you got one mountain, and now all of a sudden you moved it, and now that mountain, your risk is barely nothing. I mean, that's because you're getting credited on both trades. So if this thing starts moving and it moves against one mountain, just move your wings to turn the first mountain into a free trade, and then if it goes back the other way, then turn that mountain to a free trade. Or I should say almost a riskless mountain. I mean, it's really cool. It's a really cool, so I'm gonna start really analyzing this and seeing exactly, moving these things around a little bit more just to see what kind, how I could turn these into free trades because the break evens are way out there. The break even trades. So I mean, it's definitely for income, just pure income driven. If you did it SPX, there's no risk of assignment. You do it on the SPX, it's going to cost a lot. It's going to cost 10 times more than if you did it with XSP. Thing with XSP, you could do it with if you want to do it with 3 contracts or 5 contracts, or, you don't have to do it with an entire, with an entire 10 contracts, so you could still do it with half the amount and still, because the percentages don't change. To make 8% between now and Friday, hey, that's not bad. I mean, it's just real cool stuff. But anyways, just giving you kind of an idea. So the inventory, everything else is worked out pretty good. We're still waiting. That X trade is still, it's still dogging me out, doing nothing really. But again, I'm not going to really freak on that. The AKW, I'm not going to freak on that because of the it's still in the wheelhouse delta wise. Let me just double check, but that trade should still be kind of in its delta, as long as those deltas are not ridiculous. Then I'm not going to freak. And on X, where's the deltas on that? Yeah, we're only like 8 deltas. Intel was the only other one, and we're down to 6 deltas in that. So yeah, everything delta wise is cool. So I'm not like totally paranoid or anything. It's deltas are all good on that. The only trade that I'm looking at is that UNG butterfly. I closed the EEM trade because EEM is it's done. I mean, we got a little over. Let's see, it was 77 cents, and I bought it back for 95 cents. I mean, no, I mean, I got credit. So, I mean, actually 77 cents, so that's about $1. So at a 77 cents, we got back. So we made 30% on that, about 35% on that. No, we made more than that. Yeah, we made more than that. So anyways, so that trade's done. EEM. I may reload an EEM and do another calendar because the calendarized because the volatility was low. So I'm gonna go ahead and wait, see what happens later on today, and see if there's something more. Um, if I do see that trade come in, then I'll go ahead and do another video on that EEM. But that was the double calendar trade, and that kind of worked out. So yeah, we bought it for 77 and we sold it for over $1. So it's cool. I don't mind. Anyways, yeah, just give me some ideas. All right, y'all take care. Hotep.